Global trade tensions are on the rise. Will Malaysia's economy thrive? Tune in to find out. Hello everyone, I'm Oscar, Senior Fixed Income Fund Manager with Manulife Investment Management Malaysia. This is your Malaysia market outlook for the second quarter of 2025. Year 2025 saw the return of President Trump's America First trade policy, addressing persistent trade deficit and unfair trade practice. On 1st of February, President Trump made his first major trade move by imposing a 25% tariff on all imports from Canada and Mexico, along with an additional 10% tariff on Chinese goods. China and Canada implemented countermeasures, prompting the US to extend tariffs to more goods and markets, triggering a cycle of tariff response. Tensions further escalated on 2nd of April, a day President Trump declared as Liberation Day, where all US trading partners would be subjected to new tariff of 10% to 50%. There was 90-day pause declared later, excluding those on China, providing time for negotiations. This gives temporary relief to financial markets. Focusing on US-China trade relations, US tariff on Chinese goods was raised to 145%, while Chinese tariff on American goods climbed to 125%, highlighting a significant deterioration in trade relations between the two largest economies. These developments and trade policy uncertainties shook markets, amplifying fears of global supply chain disruption, a worsening trade war, and slower global economic growth. In a significant technological shift, China launched DeepSeek, a low-cost AI model challenging Western dominance in AI. This led to a historical $600 billion market value loss for US tech giant Nvidia in just one day. The intensified technology competition increased volatility in an already turbulent market, causing a 2% drop in the MSCI World Index, while safer assets like gold rising over 19% in the first quarter alone. Back home in Malaysia, the Johor-Singapore Special Economic Zone Agreement was finalized, enhancing broader connectivity, strengthening business ecosystem with special tax incentive to attract investment. Additionally, Malaysia secured a $250 million investment from British chip designer ARM Holdings, bolstering our position in the upstream semiconductor supply chain. Separately, Malaysia GDP growth exceeded expectations, hitting 5% in Q4 2024 and a full-year growth of 5.1% driven by strong domestic demand and a recovery in exports. Given these external shocks, we have adopted a cautious stance on the year-term outlook of the local equity market. Prolonged uncertainties could increase downside risk to growth and increase market volatility. However, factors like ongoing domestic policy reform, attractive regulations, potential ringgit strengthening, and recovery in domestic consumption could support market resilience and performance. With a dimmer growth outlook, doors are open for Bank Negara to consider a potential rate cut in the second half of the year. We will closely monitor whether domestic spending and investment can offset weaker external demand, giving rise to a slightly more positive bias on the local bond market. Thanks for watching Malaysia Market Outlook. Stay informed and stay tuned for more.